Hello everyone, today's vlog is all about inheritance tax, specifically what's known as Business Property Relief or BPR, which is a relief from inheritance tax, which under certain circumstances, if you qualify, you don't have to pay any inheritance tax. So essentially, what is it? Well, it's relief on a company asset or a business asset. So let's say you have a company that you own, or you have a partnership that you're a partner of, or a sole trader business that you own, and if you die still owning the business, then HMRC say, okay, under certain circumstances, you should qualify for BPR. In other words, when it comes to work out the inheritance tax on your estate, you don't include the value of your business in your estate. So that's a good thing, that you're not subject to IHT on your business if you die still owning the business. Now, there are a few exceptions to that. HMRC say if your business contains a lot of investments to a certain degree, then they will restrict some of the BPR relief. In other words, if, let's say, you are you might have been winding down for a while and the trade of the business has been petering out, and instead you've just been investing money within the company. So HMRC say, look, that's not what the legislation was meant for. The legislation was meant to give genuine relief for genuine trading businesses. If you've got a large proportion of investments in your company that you are trading from, then we will claw back some of the relief. So important to have some IHT planning as to whether or not your business would qualify for BPR if, God forbid, anything happened to you and you were potentially caught for inheritance tax. So there's certain things you can do to structure your business to make sure that you will maximize the BPR, and which is 100% relief. So there's no inheritance tax on the value of the business that you might have spent decades building up. Another aspect of the BPR relief is for individual investments. So normally, if you die and you have assets held as investments in your individual name, they will form part of your estate, potentially subject to inheritance tax. However, HMRC came up with a rule quite a few years ago now that said if you invest individually in certain types of investments, then business property relief will be in play. So the rule is that if you invest in AIM stocks, you will get BPR after 2 years. So let me just clarify that. So the AIM stock market is the junior stock market in the UK. It is deemed to be riskier than the FTSE 100 or the FTSE 250. Hence the reason for HMRC giving the tax break to encourage people to invest in the junior stock market. Once you've held assets in your name that you've invested on the stock market, the AIM junior stock market, after 2 years, they will qualify for business property relief. So if you die with those assets in your portfolio, they will not be subject to IHT. They will fall out of your estate as far as the IHT calculation is concerned. So business property relief is a valuable relief for protecting against inheritance tax relief. If you are a business owner, think seriously about, is your business structured correctly to take advantage of it if anything should happen to you? Also, if you are investing in a few things and you've chosen to invest individually, see also my separate vlogs, by the way, on how to invest, such as with pensions and family investment companies. But let's say you've gone down the road of having a few investments in your own name, then potentially they will form part of your estate for IHT, but you can mitigate that by swapping whatever you're invested in out of that and investing into AIM shares. Then after 2 years, BPR applies and those shares will fall out of your estate. So business property relief, BPR, do think about it. Do not put off inheritance tax planning. It's important to think about all these things that you can do. And in future vlogs, I'll be talking about various other aspects of IHT planning. So if you like this video, please do subscribe, and I will see you soon.